All right, welcome back. Last time, we laid the groundwork. Today, we're jumping straight from theory into practice. We're going to pinpoint 3 specific areas where we think the market's got it dead wrong, creating some really significant opportunities based on clear, powerful catalysts. You know, there's this idea that the market is always efficient, always right. But is it, really? We're here to show you 3 spots where it's fundamentally mispricing assets, and that's creating some incredible opportunities for those who are paying attention. Okay, so where is the disconnect? Let's get right into our first case study. This is what we call a secular trend. And what that means is it's a massive, long-term shift that isn't tied to the usual economic ups and downs. This is a big wave that's really just starting to build.
First up, copper. And we are not talking about this as some quick in-and-out trade. No, we see this as a core, multi-year investment opportunity, and it is all being driven by an absolutely unstoppable wave of demand.
You've got this perfect storm brewing for copper demand, really. 2 huge forces are colliding. On one hand, you have the urgent need to modernize electrical grids all over the planet. I mean, especially here in the US, our infrastructure is ancient. Then you throw in the massive global shift to electric vehicles, and that right there is a total game changer. And look, the sheer scale of the EV impact is just staggering. Take a look at this. Every single electric car needs about 3 times more copper than a regular gas-powered car. 3 times! So as EV adoption speeds up, this isn't just a little bump in demand, it's a huge structural leap. And we really don't think the market has fully priced this in yet. So on one side, you have this absolute explosion in demand. But when you flip over and look at the supply side, the story is all about scarcity. And this isn't just a guess, it's a geological fact. We just aren't finding the big, high-quality copper deposits like we used to. New discoveries are rare, the ones we find are smaller, and the quality of the ore itself is just consistently getting worse. So this leads us to the crucial takeaway for you as an investor. The winning strategy here isn't just about betting on the price of copper going up. The smart money is on finding the mining companies that can actually grow their production into this incredibly tight market. You want to look for producers with clear, funded plans for expansion. Why? Because they're the ones who will have the operating leverage to get exponential returns from this widening gap between supply and demand. All right, let's shift gears. We've talked about a secular growth story. Now let's talk about a structural deficit. Our second opportunity is uranium. And here, the supply and demand imbalance is even more extreme, and the catalyst, well, it's undeniable. Yeah, I mean, this chart tells you everything you need to know. The world is already in a uranium deficit. We are using way more than we're digging out of the ground each year. That's not a prediction, that's what's happening right now. And every single indicator points to this gap getting a whole lot wider in the coming years. So what's behind all this? Well, there's a massive new source of demand that basically didn't exist a few years ago: artificial intelligence. The amount of power needed to run AI in all these data centers is just off the charts, and it's happening now. This creates this urgent, almost bottomless need for new, reliable power that can run 24/7. And really, when you're talking about carbon-free options that can provide that kind of baseload power, nuclear is the only game in town. And guess what? The world is responding. There's a huge global expansion of nuclear power happening as we speak. Right now, there are 60 new gigawatt-scale reactors being built around the world. And just to give you some scale, half of them, 30, are being built in China alone. This is a real physical build-out. You can't just ignore it. So you have these new plants coming online, joining the roughly 440 reactors already operating worldwide. This guarantees, it guarantees a long-term structural increase in uranium demand. The big problem? The current supply chain is nowhere near ready for it. So for an investor who's looking a few moves ahead, this imbalance creates one of the clearest, most compelling setups we see anywhere in the market today. All right, for our last idea, we're going to shift gears completely. We're going to talk about a deeply contrarian opportunity. This is what you'd call a cyclical play, investing in a sector that's been beaten to a pulp, expecting a powerful rebound. And the sector we're looking at is one the market absolutely despises right now: energy services, and specifically frac sand. Yeah, right now, if you ask Wall Street, frac sand is a terrible business. Prices are in the gutter, profits are thin, and the stock prices, well, they reflect total and complete pessimism. Honestly, these companies are being priced like they're going out of business. But you know what? That's exactly where the opportunity is. While the market is obsessed with today's bad prices, it is completely ignoring a fundamental operational shift that's happening deep underground, right in the oil fields. Here's the simple truth of it: the easy oil is gone.
Those Tier 1 wells, the best, most productive, cheapest wells in places like the Permian, they're depleting. So just to keep production flat, just to stay in the same place, energy companies have to drill way longer wells and pump in massively more sand for every single barrel they get. This isn't really an economic choice for them anymore, it's just physics.
So the bottom line is this. The world is going to need a ton of oil and gas for the foreseeable future. And that means it's going to need a ton of frac sand. This operational reality makes a powerful rebound in the sand market, well, it makes it almost inevitable. The investors who can see past the current doom and gloom, the ones who invest now while pessimism is at its peak, they're setting themselves up for what could be an absolutely extraordinary revaluation.
Okay, so let's bring it all home. We've looked at three really different opportunities today, right? A long-term secular trend in copper, a structural supply problem in uranium, and a deep-value cyclical play in frac sand. But even though they're different, they all point back to a few core principles for building real long-term wealth.
And it all comes down to this. First, you need the patience to let your big idea play out, even when things get rocky. Second, you have to demand financial strength. Always focus on companies with rock-solid balance sheets that can survive anything. And finally, you have to have the courage to buy high-quality assets when they're at historic lows, precisely when everyone else is panicking.
Look, the market sells on panic. The real question is, are you prepared to buy with conviction when that happens? That's what separates the average investor from the ones who truly build lasting wealth. Thanks for your time.